Good morning, traders. Let's take a quick look at follow-up analysis for gold. So we talked about it on Sunday evening. I did some analysis and I was looking to see how price would react around the 1810 being the 76.4. So we had seeped down all week. We'd been looking very weak, very heavy on the support, which was holding and propping itself up, and as you can see, pretty much price spiked down and then has currently reversed, and we have our 764 strategy currently in play. Just to explain that in a little bit more detail, this is why I'm making a video, because it's important to recognize these examples of these strategies and to then share them with you so you can understand exactly how you would enter this trade and how you would use the strategy. So this is a daily just to highlight this current range, and you can see the price action all last week was failing to make new highs. And if you recall, I put 1863 as a point of support and resistance in terms of it being key area. If it breaks above, then we're bullish bias. If it stays below, then we'd still remain bearish, because I know a lot of people were trying to take longs on gold despite the fact that it hadn't finished doing its move to the downside. Now potentially it may have finished its move to the downside, but it remains to be seen if we're going to have another leg down later with the US session, or if it's going to start climbing up. But 1863 is still my marker, because that's the high of this last swing high, this last range. So let's drill down into, that's the daily chart, let's drill down to see exactly what happened at the 76.4 at around 1810. So you can see when markets opened late Sunday evening, London time, we had a spike down about half an hour into the session, and you can see that spike on the 1 hour a little bit more detailed. What's important to recognize is how the next hour at midnight it closed and opened at 1810, bang on 764. So it was a perfect entry for a long. Now when you see stuff like this happen, people ask, well, where'd you put your entry, where'd you put your stop? So with the 764 strategy, what you do is you drill down to like an hour time frame, or to a time frame that you start to see the price action do what it's doing like this, so you can really look for an entry. So had this been a time where you are sat and you're actually trading and you're watching and it's testing the 76.4, doesn't matter what time of the day or night it is, as you can clearly see, this was midnight last night, London time. Other parts of the world you would have been awake, it might have been afternoon or early morning. So drill down to the 1 hour, drill down to 30, 15 minute, whichever you feel is a time frame that works for you. And you can clearly see on all the lower time frames how price has tested and then reacted. So people would say, well, where'd you put your stop? Well, your stop would always be wherever the low is. So in this case, we had a pretty nasty or pretty aggressive spike down, which was down around 1802. So your stops would have to be considered anywhere below 1802. Bearing in mind that you have 1800 as a round number, which I'm sure a lot of traders were looking for in terms of a short. Price may still, after it's done this long-winded route all the way up to take out stops and to liquidity grab perhaps, could still eventually just curl back down and complete the end shape, thereby maybe coming all the way down to test 1800 on the second move down. So that you have to bear in mind. But for a good 764 strategy, you can see that entry point was pretty much bang on the money at 1810, and you can see also that your stop loss would have to be considered below 1802. And then once you start seeing a move up like this, again using say a 15-minute time frame or 30-minute time frame, when you start seeing a decent move up and your risk to reward is pretty much one-on-one, so in this case you'd be looking for a decent pump up, which is what we got, and you're looking for about 80 pips, which is also what we got, and you're looking at an 80 pip stop loss. That's a one-to-one. You could, if you were, you could then move your stop loss to break even and tuck it in just behind or just where you entered, so making this a risk-free move. And that, in essence, is what the 764 is all about. It just helps you to understand, that you shouldn't be getting in shorting at the very lows of the move, because I know a lot of people would have been trying to aggressively short this, and if they'd missed the first move down because it pumped down very quickly, very aggressively, they might even then look at the pullbacks and look to get in, which is, it's understandable, right? So you're going to look on a smaller time frame when you're going to see something like on a 5 minute. You're going to think, okay, this is pulled back up, which it did. It sprung all the way back up, and then it slowly started to fill this void, started to fill this wick. But as you can see, we got to 1810, and I was speaking to a colleague last night, and we were looking at this because he was long on this move down, so he got the move up, took some profit, and then he was short just to fill this void. But I said to him, 1810 is an area where we have the 76.4, so see what it does there. So if you're shorting, see what it does at that level, because that was where we had the 764 strategy would come into play. And so it hit it bang on. And so, for anyone not in the know, not aware, they would probably try and short, thinking it's just going to go down and fill this wick and just short it all the way down. But it was an impulsive spike down. And so then they would have ended up maybe trying to enter short down here and then see it go against them straight away, and could end up losing because they're trying to chase a move like this that's, it wasn't factored in, it's not part of their trade plan. So this is how we use the strategies, and in this case this is how I use the 764 to help guide me with price action and understand why price has reversed here. It wasn't just a random place of reversal, it was very much relevant. And so let's just show you that on my other charts. This is gold on the 1 hour, and you can see quite clearly price stabbed down and then found support at the 76.4, and so it was a reversal, and it was a place that if you were short on gold is also the place where you would take profit or consider taking some profit on this pump down. So I hope that's helped you to identify how we use the 764 strategy and how it's valid and how it's being used as a good indicator, if you like, to help you with your price action, whether or not you are going short for this target 1810 or whether you're buying off this target at this level 1810. So it helps you in both directions, in both ways, because some traders could have been holding shorts and could have been short this evening, which I saw that they were short on gold. So knowing where to get out and where to target as a first target is very important, obviously, because then it reversed and gave it all back. And so we use it in that way. Hope that's been helpful. I will keep you updated on gold. I'm looking to see now on the daily and on the high time frames, we're going to have another stab down because it's had a good pump up, or are we going to continue to go turn bullish? It has to stay above 1840 and then ideally climb above 1863 for longs.